Good everyone, Les here, Chief Analyst of BG Trading in Australia, and I hope you are well. Today is 14th of August 2024, and I'm going to be talking about 4 stocks that could report better than the market expectations, which at the moment are pretty low. I'm going to use Epen Limited as a case study to show you that when the market expectations are pretty low and the company reports a little bit better than the expectation with a positive outlook, that's when we have those significant rallies. So let's have a look which are those 4 stocks. And once again, I'm bringing those stocks right now as they haven't yet rallied. Because once they rally, there's no point bringing value for you because you probably already would have missed the boat. I'm also going to be sharing some of the reasons I think those stocks could report better than expected. Let's have a look. Remember guys, this is not a financial advice, just as from BG Trading, sharing with you how we apply our strategies to know when to buy and when to sell with stocks, how we set up targets, stop losses, how we avoid buying stocks at the formal levels, which is one of the most common mistakes. Essentially what we do, we have a VIP membership program which we buy stocks together with our VIP members to chase 20 to 40% profits as we set up targets, and then with a very narrow stop loss in order to protect our capital. That goes right towards the market psychology, and we obviously not only take technical aspects but also fundamental aspects and match with a macroeconomic outlook, which what we call a multidimensional trading approach. I also like to invite you to become a member of our free Facebook community. We call that Buy, Grow and Sell Strategy for Share Traders. We post a lot of great quality content in this community, and take a look on our website if you're interested on our VP membership program, bgtrading.com.au. We are Australian-based company, and we are actively trading and providing fantastic content to our clients. Now let's talk about Epen, and we'll give you as an example because this is a stock that we have been sharing our thoughts with our VP members since the stock was trading at 50 cents level, which we took a position, and we are now, as we speak, 40% up on this particular stock. And then we're going to keep holding that because I think there's more upside. We have video talking about Epen specifically, which I'm going to be putting the link right there. And so I'm not going to go in details because we're going to Epen is not one of the 4 stocks that could report better than expected. In fact, Epen has already rallied on the back of that report. Although I think there's a further upside. This is not the stocks that we're going to be talking about. So now the first one, let's start with EML. And you will notice that most of the stocks we are talking about here in this video, we already been covering this channel anyway. And they are stocks that we trade normally. So EML is currently trading at 86 cents. The company has been at net loss as a result of a very bad decision of buying PCSEL business in Europe. This business has been blocked to trade by Central Bank of Ireland, do some potential money laundering and some potentially criminal activity using the company, this service facility. So essentially, PCSEL was burning about $20 million a year, and EML has taken the decision of winding down this Irish subsidiary in early this year, which obviously has came up with a lot of one-off costs, but the outlook now is positive as EML Group is free of this so-called cancer dragging down cash in order to sustain this non-profitable business. So as his history shows, EML has continues to improve its business, underlying business without PCSL, and we are expecting that to reflect on the upcoming result, which is going to be released at the end of August. Obviously, we need a confirmation. At this stage is still a little bit speculation, but everything indicates that once as the company has finally wind down this business that was dragging money down, it could potentially look into towards profitability. Also wanted to highlight that EML makes money out of high interest rates environment, although this is a kind of tech fintech company. So the stock price is currently trading at 85 cents, 86 cents, and there's a trading range from here to from down as low as 85 cents to $1.20 if the report comes to show that the underlying business has a positive outlook for FY25. We well could see a breakout of the $1.20. Remember, the AML is a high volatile stock, and then it's not suitable for conservative traders. Also remember, this is not a financial advice. You gotta do your own due diligence. So go on the EML website, take the reports, and start understanding, because I think this could be a very good opportunity buying at the current levels at what we call technically discounted price for the reasons I have just explained. However, we still need to receive confirmation from what the outlook for FY25 will be, and the current numbers, which we haven't received a quarter update yet. Now let's move to the second stock, which you probably already guessed is Cettire Limited, CTT. This is another example of stock that has been not only oversold but also highly manipulated with short traders. We have a dedicated video about CTT in this channel. I'm going to be putting also the link right there up there, so take a look. And the stock now is trading at a technically discounted price. As I mentioned in the last video, there's a strong downtrend resistance level. We need to have a solid breakout of this downtrend, which you haven't seen it yet. It looks like we might have a double bottom formation. I really want to see a strong candle with high volume to the upside, which I haven't seen it yet. But we could well see a recover from here. I'm expecting Cettire to report a better than the very low expectation of the market. Still, as we have the fourth quarter of the last financial year, potentially not being a profitable quarter. But I want to highlight the company has been investing into a China launch. So it's a growth retail stock with international exposure, provided that we enter into monetary easing with Fed cutting rates and many central banks around the world cutting rates as well. That could directly benefit stocks like Cettire. So we have positive macro outlook. We also have a stock trading technically discounted price and potential strong fundamentals. The key three pillars that we normally use to make a very effective trading decisions are favorable for Cettire at the moment. Obviously, we need a confirmation of what FY25 outlook look like from the upcoming report, which will be released in the second half of August with not disclosed date. All right. So watching closely this one could have a big moves right here at the current levels. The third one is Bubs Australia. And once again, I'm bringing this because it has been trading at 12 cents for quite some time. We have actually a big move today. If you're following us, you know that we like Bubs Australia at the current levels. For the same reasons that we discussed in our last video, this is a stock that has been increasing and turning its business around in China, and exponentially increasing its sales, its revenue in the US. But the problem, what makes Bubs stay at the current levels is because the company is still burning a lot of cash. In fact, the company has reported burning $27 million cash in order to fund its FDA applications and everything, and get ready to permanently stay in the US market. This is a positive thing, and I wanted to highlight this. It is a non-recurrent cash burn expense. So which means we won't see this $27 million cash burn coming into FY25. Therefore, it's make entry at the current level a green tick from the technical perspective. The macroeconomic outlook also in a stock like this is positive interest rate cuts, and also from the fundamental aspect positive, because this company has turned around Chinese business, so we have actually seen some growth numbers in the last quarter, and also could keep expanding, likely to keep increasing its revenue and its business in US market. Small cap company with a big potential, because we are talking about only cents of dollar at the moment, 13 cents as we speak. So just keep that in mind, put it on your watch list, because by the time you wanted to buy this stock, probably going to be too late, because the stock would have rallied considerably. As you can see here, small rallies are effectively over 50 cents, and I will be expecting soon a 50% rally if from the current prices. So it's very positive in my opinion. Okay, the fourth one is another one that is familiar in this channel, Kogan. You know the reasons I believe Kogan is positive. First of all, because the technical aspect is positive, fundamental aspect is also positive. The company is still increasing its profitability, and very likely to report slightly better than expected, because the expectation for retail stocks at the moment is pretty low. But as you see, JB Hi-Fi reporting better than expected, and Temple Webster reporting better than expected as well. As Kogan comes to the lower end of the retail, the quality retail stocks in Australia, it's also a company that has been very successful in delivering its and continues to stay in the Australian market, even though there's a lot of people arguing about, but Amazon will kill Kogan. Amazon hasn't really picked up in Australia, and Kogan is still a major player in this type of retail business. Online retail business. So I would say that, and again, like, we're looking for short-term opportunities, right? If Kogan reaches our BGS 20 target, for example, or 20 to 40%, we sell, we move on. We're not looking at investing all our retirement fund in Kogan. And actually, we don't looking to invest our retirement fund in any stock, as companies change. Companies and macroeconomic scenarios and technology and products, they change. Business model evolves, and some companies, they just lag behind. Other companies we're not even looking at today could be the winners tomorrow. So that's why we trade on the stock market. Our long-term gig has always been real estate, property, and we do commercial and residential property. That's what we like, and then we use the funds of trading, and then we check into long-term investment, and then we keep trading and recycling the money with trading and dumping into property. This is our long-term gig. No, we don't invest in the stock market. This is highly manipulated, as you know. Okay, so that brings to the end of this video. If you want to have access to some of our stock analysis, we have been analyzing pretty much all those stocks. Take a look on our VIP membership program, which is available for anyone to sign up, and then you have a free access to analysis, to our targets, and obviously some of those stocks we don't own, other we own, but we do provide a great deal of understanding. The key thing for speculating stock prior its financial result is that we can have a company is reporting really well and the stock price is still falling. So we have to understand what are those stocks that in fact could report better than expected and the expectation is really, really low. And that's when we have the big jumps. Now, if we have high expectations and the company reports well, but not to meet the high expectation, as we saw CSL yesterday, CSL has fell 3% and the report was pretty good. Let's take a look. CSL is up again. The report is pretty good. This is also a stock that we traded in the past, like we had at $320 target, and then obviously most of the profit has been already done here. But look, it is a high quality company that reported pretty well, has shown growth, has increased dividend, but has still fallen. And then that's when obviously you gotta understand this market psychology. If the market psychology doesn't match with what the company is reporting, then obviously that's when we have a big movements on the stock price. Okay. Yes, that brings the video to the end. Let us know what you think. Let us know what you reckon about those stocks that we are talking in this video, and if you have any other suggestion that falls under this particular category of stocks that could report better than expected and the expectations are pretty low, let us know, and I'm very keen to take a look and analyze for you if that is something that has liquidity and has the company generates revenue and could be shifting from net loss to a net profitable position. That will add not only value for us but to our viewers as well, in order to keep this channel and high quality content. Thank you very much. See you in the next video. Bye.